Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to have a little chat about the sudden decision made by Disney late last night and the implications that could possibly mean and more lockdown fears in China and how that is impacting the market. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, indeed, late last night, Disney announced that on Sunday, Bob Iger will return as CEO. Bob Iger was CEO for Disney between 2005 to 2020, and he's infamous. He's incredibly famous. In his tenure, you saw the likes of Star Wars or Lucasfilm being purchased, Marvel, a massive expansion of Disney as a media-dominated force, plus the launch of Disney+. Now, he will be replacing Bob Chapek, who has been CEO since 2020. Now, Chapek's tenure has been riddled with controversy. And plus, under his watch, Disney Plus has been losing heavily. Now, Disney share price so far this year, under Chapek's leadership, has fallen by 41%. 41%. In fact, it hit a 50-week low on November the 9th. And it's heading for its first or worst annual loss since the 1970s. This is why they brought Bob back to save the day. Because under Bob, his original reign, Disney share prices rose by 430% during his tenure. Now you compare that to the S&P during the same time, S&P 500 grew by only 150% during the same period. So you can see that Bob has a very strong influence on Disney. Now, Bob has said this: I'm extremely optimistic for the future of this great company and thrilled to be asked by the board to return as its CEO. Disney and its is an incomparable brand, and franchises hold a special place in the hearts of so many people around the globe, most especially in the heart of our employees. He goes on to say, I am deeply honored to be asked again to lead this remarkable team with a clear mission focused on creative excellence to inspire generations through unrivaled, bold storytelling. Let's hope so, hey, let's hope so. On the back of this announcement, Disney in pre-market has risen by about 8.56%. Let's have a quick look at Disney now. So obviously, it's not trading at the moment. We've got to wait for the US to open. But as you can see, it closed at $91.44. It'd be interesting to see how the market reacts to this on the US Open, because don't forget, these sort of decisions can really affect a share price of a stock. So it'd be really fascinating to see how the market reacts to this breaking news or this sudden development from Disney. In other news, right? Yeah, this is why we've got a risk of sentiment in the market at the moment. We have a surge in COVID-19 cases again in China. And in fact, they started recording their first deaths from the disease or from the virus first registering the first deaths from the virus in 6 months. So obviously the market is now expecting China to go into lockdown again. Don't forget, China has zero tolerance when it comes to COVID-19. So this is greatly impacting the market sentiment as it currently stands. So let's have a quick look at the market now, because we are seeing dollar strength once again. We are seeing the dollar strike back. As you can see, the euro, who is trading around the 104 handle, is now under pressure again and trading back at 102283. The sterling, same story. Again, not so bad as the euro, but again, under pressure because we got dollar strength because of risk of appetite. And again, the dollar yen, the dollar striking back. Now back above 140 again, currently trading at 141.82. Key area for me for this pair, I'll be watching be 142.69 as a potential area of interest. We can see again dollar strength with gold again, coming back to test that potentially key support level of $1,726.48, currently trading at $1,738 as it currently stands. You can see this in the oil market as well. Oil back under $80, because don't forget, China is the biggest purchaser of oil. Okay, so if China goes on lockdown, this is going to affect demand again for oil. So that is under pressure, $79.53. Brent's the same story as well. Again, under pressure, $86.47. S&P 500, okay? Just like say, slightly negative. It closed negative on the day in the week last week, currently trading up 3,946 points. So yes, we have indeed got a little bit of risk off attitude on the market at the moment. Down, like I say, down to COVID lockdown. Don't forget as well as that, the other thing which is driving the dollar is what I discussed last week. And that is, of course, obviously more Fed speak. Yes, there is hints and suggestions they're only going to do a 50 basis point rate hike in December. However, they have said they're not going to stop. The market previously was hoping for some sort of pivot or some sort of pause. They keep saying they're not going to. In fact, they're actually saying interest rates will be around about 5 to 7% next year. So that's the thing. Other things to come in the market. Other things happening this week. Canadian retail sales, German manufacturing PMI, UK services PMI, US durable goods. But the big one is FOMC minutes. Let's see what they say. And I really think if that comes in slightly hawkish, then forget about this good feeling in the market. We're going to see a lot of potential pressure on the market, but definitely potential dollar strength as well. So that is the big one. Equities in the European session, as they currently stand, FTSE negative 0.21%, DAX currently trading negative 0.43%, and Eurostock 50 currently trading negative 0.53%. Don't forget, you can ask me questions anytime you wish, or simply, say hello if you like, or tell me what you think about Disney. Do you think, this is going to be able to turn it around? I mean, the worst annual loss since 1970s. That is not good. Not good at all. I mean, obviously, they're losing a lot of money with Disney Plus, but they always said they're not going to make a profit on Disney Plus till 2025 anyway. But the fact that they are making a loss, the theme parks aren't doing so well as they hoped after obviously after lockdowns. So in general, let's see how he turns it around. Can he turn it around? He's obviously a bit of a white knight to Disney, because let's say obviously his last tenure, he was incredibly successful. Don't forget, if you think of a question later, you can put it in the comments section, either on Facebook or YouTube. I will see them and I will reply to them next time I go live on air, which in fact will be tomorrow. I won't be doing an afternoon broadcast today, because today I'm going to spend a bit of time with my son, as it's his birthday. So I'm going to spend a bit of time with my son today. But I'll be back online tomorrow. And again, obviously at 9:30 a.m. UTC. So please come and join for that. And again tomorrow at 3 p.m. UTC to cover the US session. So please come along and join me for that. Hey to you too. Hope you're well. How are you doing? Hope you're good. Yeah, bear that in mind. Okay, if there is no questions, not a problem. Not a problem. Like I say, happy birthday to your son. Thank you ever so much. I really appreciate it. He's 13, believe it or not. Do I look old enough to have a teenage child or teenage son? Don't answer that. Anyway, till next time. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you put up with me, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only. And in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.